hello everyone, and welcome to another episode of Weekly Crypto Roundup. I'm Gökçe. This week we have amazing guests from JST and Flowdesk. Also, we have Tim, our CEO, with us. Hello,
everyone.
guys. Welcome.
Hey.
Hello.
Hi, everyone.
Hey.
Nice to see you again, Gökçe. Thanks for doing the live stream. Let me introduce myself again for those that don't know me. I'm Tim Shan. I'm a COO of Dexalot. I've been in the crypto space for about 4 years now, and all with Dexalot. Prior to this, I had a career on Wall Street, working for a combination of banks and hedge funds for over 25 years or so. And I was last COO of a global macro fund. So we're joined today by a couple friends or a few friends from a JST Capital and Flowdesk. Hi, John, Sacha, and Nico. Welcome.
Thanks, Tim.
Thank you.
Thanks for having us.
Let me just go around the table here, starting with John, and maybe you could spend a little time talking about yourself, your journey in crypto, and what JST is, and we could turn it over to Sacha and Nico to do the same.
Definitely. Thanks, Tim. So good to meet everyone. I'm John. I'm the head of business development at JST Digital. We are a crypto native financial service provider. Been in the space since 2018. Headquartered in Singapore. I'm based in New York. We specialize in a few things. We do market making, working on behalf of both top tier issuers, exchanges on the CeFi and DeFi side, as well as new tokens coming to market. We also help crypto holders manage concentrated positions in terms of various treasury management strategies, as well as work on various strategic partnerships and initiatives, both with the assistance of our own balance sheet. We are active as strategic venture investors and with partner capital. In terms of my background, so yeah, like a lot of people in crypto, I started in TradFi. I was a emerging markets prop trader at Macquarie for a number of years, where I focused on equity and FX arbitrage. That was where I really kind of got the crypto bug, seeing a lot of the inefficiencies in the traditional FX world. Ended up working at Circle back in 2018 while I was getting my MBA. At the time, a lot of people have forgotten this. Circle was one of the early pioneers in crypto OTC trading. Companies obviously evolved in awesome ways since then, but spent my time there working on, again, what was at the time their top 2 or 3 spot OTC desk by volume, which for me at that point, there was kind of no turning back. It was like, wow, my hobby is my career, and I have been in the space full time ever since. I've been with JST just over 3 years now, where I oversee all of our external client-facing opportunities and partnerships. And so, yeah, Tim, Gökçe, thanks so much for having me. It's love the content you guys put out, and fun chatting markets with you all.
All right, cool. Thanks, John. Nico and Sacha. Nico, you want to start first?
Yeah. Sacha is in trading team, but I leave it to him to introduce himself. I look after BD in the EMEA region for Flowdesk. We do a number of things, which it's going to echo what John just said. Flowdesk, we started in 2020, and I guess the initial kind of core focus was token market making at the time. It's been a bit rough for altcoins and smaller tokens after 2021, when liquidity fled massively. So it's been kind of the focus for us. But since then, we've grown so much. Now we do a number of cool things. We spun up a big OTC desk. We cover both spot and derivatives across options, forwards, futures, any sorts of bilateral products. We trade on 150 exchanges, both centralized and decentralized, both for clients with their own kind of on their account, but also on a prop basis. And finally, we also be somewhat active in venture capital, but I guess I wouldn't call it quite like that. So I will. And as for my background, it's pretty, the usual boring stuff. I used to work in banking, same on a repo trading desk, interbank in London. kind of like started my career like that, and then I was gambling and losing a lot of money on shitcoins on the side. And
Oh, okay. I thought you were going to say losing money in repo. That's
no,
very hard to
not
do.
in repo. It's very tough. You can't lose money in repo.
Yeah, no.
But you can fall asleep while trading, so you have to be careful about that.
Yes.
But the point is like, yeah, I mean, I just ventured a lot on my pleasure time on the side, like during the weekends and stuff. And eventually, I just wanted to do this full time, so I joined Flowdesk at the time. We were quite a tiny company back then, probably like 18 or 20 people or something like that. So yeah. But I let Sacha, introduce himself.
Yeah. Hi everyone. I'm Sacha. Just for background, because I was like, when did I start using crypto and stuff? And actually, part of my engineering school, you have to do internships, and I spent an internship with at one of my friends' startup, and he was doing like a crypto bots, and it was like 2017, so a bit a long time ago now. But then I started also in traditional finance, spent a few years in London in options market making. And I joined Flowdesk about a bit more than 2 years ago in the Paris office. And I'm a part of the trading team. Now, obviously, like we have got different desks, but I'm on the one for market making for token issuers. So yeah, helping them provide liquidity on dozens of exchanges, and it's been 2 years since I've joined. Yeah.
Got it. All right. Well, thanks for joining us, all three of you. Just Nico, a side note, I actually started on Wall Street in repo as well. And as soon as you said repo, it comes back. I have flashbacks to my worst day in repo, which is basically I used to cover BlackRock. They asked me to bid on $1 billion 10 years, and I said offer to the trader. So I flipped it. Fortunately, I caught it fast enough, but that was not a good day. That's for sure. Not on 1 yard of U.S. Treasuries. So
that happens.
Yes, it does happen. Cool. Well, let's talk more about market making in crypto specifically. Gökçe, I'll turn it over to you. I think you had a few questions on this.
Yeah, actually, thank you for introducing yourself, and thank you again for joining us today. I would like to ask, what does it mean to be a market maker on a decentralized exchange, and what's the difference between a centralized exchange, and how is your experience with that?
Yeah, I think I can enter that. Obviously, on a centralized exchange, where it works with like limit order books and off-chain settlements, so you just communicate with an API and provide like bid and ask, and people trade against you. And that's on all the centralized exchanges. Whereas on decentralized exchanges, where they have automated market making features, like on Uniswap, for instance, then you can still provide liquidity up to certain ranges. Now they came up with like V3, where you can concentrate liquidity, and then you could like put liquidity and just update it along the way, just so that you don't lock your tokens for nothing. And other decentralized venues also have like CALOB features, so kind of working like a centralized exchange but with on-chain settlement, and so that's how you interact with it. Some of them are like pretty similar, and for the other like automated market making, you still come up with like a automatic seeding of the pool, and you can move it around different ranges.
Yeah, and I think just to build on that, and Gökçe, I think you asked a good question of what does it mean to be a market maker in general. Fundamentally, being a market maker, you are providing liquidity to ensure fair and orderly markets. You as a market maker are willing to buy and you're willing to sell, so the market participants can fairly and smoothly buy or sell at a reasonable market price. For the way I think about a lot of the DEX versus CeFi market making, I think Sacha made a very good distinction of AMMs versus order books. Dexalot being an order book is something that looks much more similar to what people are used to in terms of a CeFi venue when you go on Coinbase, when you go on Binance, et cetera. But what's been really interesting, I would say, for us as a market maker that's super active on specifically DeFi order books, I should say, is that from a risk management and trading perspective, it looks very similar. Where the complications come in, or I shouldn't even say complications, but nuances are around the fact that you are interacting with software that is to some degree blockchain based. Dexalot as a club that's fully on chain, which provides the benefits of DeFi, which transparency, fast finality, et cetera. That is still different than interacting with off-chain, quote unquote, exchanges. We have worked on various order book DEXs since before my time at JST, which I think people thought maybe we were a little bit crazy at the time, because back in 2021 or so, AMMs were almost all of the DeFi volume. And, it's been really interesting to see order book DEXs gain attention share, gain volume share, because at least from a trading business, it looks quite similar from a risk management perspective to what not just crypto market makers like those of us on this call, but I think people in general who interact in traditional markets are used to. So we can go on into more nuances there, but they're, definitely call out the difference between an AMM and an order book model.
Yeah, of course. And let me ask you a question. I mean, John and Nico, you guys talk to projects quite often. What are some of the, I guess, misconceptions of what market makers do?
I like that Nico and I both have the same laughter, because I think we're going to probably have a pretty similar answer.
Specifically that way, so instead of saying, what does a market maker do? Because I think there are a lot of misconceptions out there.
Yeah, and I think, to be honest, this is probably one of the most obscure kind of like role in the ecosystem, but it doesn't have to be. And I think it's like there's a lot of like mysticism around what we do, and every time there's like something happening on CT where there's like this address dumped XYZ blah blah blah, or like this token did whatever crazy percentage increase and then dumped very hard, it's always like because the market maker did something wrong, or it's always because like you're going to you have this big fat open position on Hyperliquid like James Wynn, and you're like, the internal Binance market making desk is out there to hunt this guy. Like that's not really the case. I feel like while there are definitely shenanigans involved, like in crypto especially, I mean, there are shenanigans involved in TradFi, if you ask me, but in crypto it's much more apparent. But like most market makers, what they simply do is they're just happy to sit in the middle. And for years, it's a big deal because these markets are not liquid at all. And like even some of the Binance listed coins, like I don't know if you've seen this announcement by Binance, like when they said there's this basket of coins and we're going to put rebates for everyone providing liquidity on this specific basket of coins. It's like very recent, I think.
Okay.
It's like it goes to show that like even the Binance listed coins, or like some what you might consider liquid, like are not that liquid.
Yeah,
that's right. To attract liquidity, and I believe that like historically there has been a lot of like internal exchange market making desks. I shouldn't probably say it. I'm gonna get in trouble, but
well, you said it.
I think it's fine. Sorry, but I think that's no longer true. And I think since Alameda and FTX, this is kind of like becoming a bit more, I would say, healthy. So now you actually need like to bring market participants to the scene and just actually make them provide liquidity. So that's why, I mean, this is booming. And for token issuers, what they need to really understand is that no one is going to trade their coin if they don't have any market. And that's the big difference, is that bootstrapping that liquidity on an AMM, like just doing it permissionlessly DeFi way, is just so much more expensive, and the price discovery is just so much worse. So talking to a market maker, talk to your nearby market maker in your local neighborhood, because they are going to help you. I mean, it doesn't have to be either of us, but there are a lot like medium-sized shops and bigger ones. But this is like, you don't want to overlook that conversation when you're a token issuer. This is very important, and it takes time. You can't do that like 1 week before your TG, because I guess that's kind of like what I wanted to say. I'm a bit rambling, but yeah.
All right. I agree with everything Nico just said, and especially I think one of the big misconceptions is around the unfortunate shenanigans that go on in all markets. I think that people think, oh, my market maker's job is to make price go up or this or that. You working with a reputable shop like JST, like Flowdesk, our job is not to influence price. Our job is to provide sufficient liquidity that people can buy and sell the asset at fair prices. Yes, that should, all else equal, increase market confidence in a given token. It should increase volume over time. But anyone who promises price action volume is just leading you down a path that, as a reputable project, you just don't want to be going down. And so I think that's, to me, at the crux of some of this kind of crypto Twitter misconception. As market makers, we don't have a money printing machine. Like, yes, we should more often than not make money in our trading, but that's not always the case. One thing for us is that when we work with a project, and I definitely recommend any projects out there who are thinking about their market making strategy, you need to understand what liquidity commitments your market maker is agreeing to. And you have to trust that they're going to follow those liquidity commitments. For us, it's paramount to stick to what we've promised with projects. But you know what? Sometimes that ends up with situations where in the near term, we might be losing money. We don't have a money printer. In the long run, yeah, it should be working out for everyone. But we're taking risk. And again, all of our goal as market makers is to ensure fair and orderly markets, to give the market confidence that they can both buy and, if they want, sell out of a token. And so I think that is really the crux of a lot of this misconception.
Yeah, I think just to add on one more misconceptions, because I've seen a bit of comments, like some of the market makers have pretty bad reputations, because whenever price goes down, they're like, they saw like a wallet moving funds, and they're like, oh, they just dumped it. But the thing is, most of the time, we actually run like delta neutral strategies. So if we're selling, it just means we bought back just earlier, or opposite. And I think that's something I've seen like a couple of times there.
I think Sacha will know better, but I think the flow is also very toxic in crypto compared to traditional markets. Mm-hmm. And that's something like, maybe in 2021, like you had massive retail inflow, and we can talk about that later, but this is not happening. I don't think this year. And I'm not even sure.
Okay, in terms of retail. That's what you said, right?
Like uninformed flow, taker flow. Mm-hmm. I don't think we're gonna see that back anytime soon. And it's kind of like the sea rising with the tide. Like, it lifts everyone because that uninformed flow is just here, and we make money from that because we are here to provide them with a price. But the problem in crypto, especially right now, and it was even worse like in 2023 or 2022 when liquidity was like so thin. Most of the flow that you are seeing was toxic, so you would be getting robbed by people that have more information than you. So providing liquidity in that environment is like very, very tough. And as John said, you're gonna bleed. You lose money because you have commitments. You have commitments that other market participants might not have. So by definition, you're gonna get picked off. That's something that's paramount, and that's why in crypto you see so many like incentives programs with rebates, airdrops, any kind of like incentives for liquidity, because if you don't incentivize that liquidity, there's just not going to be any liquidity because it's so tough. The flow is so toxic.
Yeah, that's a very good point, and I think a lot of projects probably don't realize that, right? Because they think that you guys are making markets, and you guys are really being thrown into like a boxing rink, right? Or ring, and basically you guys are fighting every single day, every single hour, because there is a lot of toxic flow that's basically attacking you at all sides and at all times, 24/7, right? And we do see at Dexalot, we actually see that type of flow, and we try to block it or risk manage it as best as possible, right? But it's constant, and there are some very intelligent people out there that systematically attack dexes, which you see on all dexes, and I'm sure it happens on centralized exchanges as well, right? So and a lot of that battle is, you guys are on the front lines of it, right? That's a really good point. So I guess you had mentioned about Nico for projects to talk to you guys as soon as possible. What is a typical lead time for a project to start talking to a market maker?
I don't know what you think, John, but to be honest, I think it should be, 2 months, 3 months before your listing. And honestly, the listings all get postponed anyway. So no, but it's true. There's massive bottleneck in this industry because there are only so few venues where it's actually worth it to go for a TG. And they have so much power, like the Binance, Bybit, KuCoin, OKEx of the world. They just hold so much power because most of the projects they have to list there, otherwise the token is kind of dead, unfortunately. So they hold so much power, and it's gonna create a massive bottleneck because there are more projects and tokens to come to market than there are good exchanges. So I suspect this will change. I don't see a world where Binance becomes kind of uncontested. That's not how free markets work. And there are going to be issues with that, and you can already start seeing it with Hyperliquid. It's a good example of this. But I believe in a multi-exchange world. But sorry, I'm just another topic. For tokens, 2-3 months ahead is fine. But yeah, you're going to have plenty of time because of postponing listings and stuff. I think.
No, I agree with Nico, and I think just the one thing to add on that is that token projects shouldn't be afraid to talk to market makers far earlier than that. For me, I think that a key differentiator in a relationship with a market maker is trust. And like any relationship, the more time you have to speak to the JSTs, to speak to the Flowdesk, to speak to 15 others, you get a sense of who you trust, who you don't trust. And one thing that I tell every project that we work with is that this is a partnership in the sense that you need to trust us, but we also, vice versa, need to trust you. Our model at JST, we don't aspire to work with every single project we talk to because we want to work with people who are going to be around, who are going to be in the market for years to come. It's a two-way street, and so. Definitely agree with Nico that at least giving some lead time. Like I've had people say to me, "Oh, we're going to go live next week. Can we figure this out?" And it's like, whoa. But again, like any relationship in business or in life, it's got to be a partnership.
Got it. Yeah. Let's go back to crypto later, but let's talk a little bit about macro and what you guys are seeing in terms of the economies, the U.S. economy, international economies, Asia, Europe, etc. Why don't we start off with Sacha?
Yeah.
What are you guys seeing right now?
Yeah. To be fair, I think we're just in the middle of so many questions and interrogations regarding tariffs, interest rates, and stuff, and you see it also in Bitcoin price. It's kind of not going anywhere. Volatility is pretty muted at the moment. That's what we've seen. So just waiting for clearer path, clearer answers, which are not coming anytime soon. So that's the main points, I'd say.
What's the local economy like in Europe right now?
And now, if you add it to Europe and apply to crypto, I think you just add even more problems. You add more regulation constraints and stuff. But you can't just go like have the European regulation to it. Like you still have like to listen to the global thing.
Yeah, got it.
Yeah, and I think just one aspect of macro that, not necessarily a head scratcher, but it's just an interesting time to think about the markets. We got the S&P basically at all-time highs, Bitcoin at all-time highs, gold at all-time highs, bond markets swinging pretty wildly for bonds every day.
Yeah.
Not that anyone has a crystal ball, but what I've been particularly interested in following are some of the correlations that are both breaking down and starting to appear. I personally, it's been really encouraging to see Bitcoin and NASDAQ correlation really break down to a degree over the past few months. I think that's part of the excitement that we probably all got interested in crypto, that if we're just trading bang in line with risk assets, is this really a different asset class? Probably a different conversation for another day.
Right.
But I saw an interesting take the other day that I then sort of fact checked myself, but it was looking at the long end of Japanese government bonds, so 30-year Japanese bonds, and seeing correlation appear with Bitcoin there, in that when yields going up, so price coming down, you're seeing it correlate with positive moves in Bitcoin. And I was chatting with a colleague about it, and I think the takeaway there might be that if you look at long end government bonds, yields going up, Bitcoin going up, is that a sign that perhaps that's a slight indication of people losing faith in the broader fiat debt credit driven economy? Is Bitcoin becoming the safe haven that everyone has trumpeted for the last 10 plus years? I personally can see Bitcoin as being a non-correlated safe haven asset. Have we seen that play out? Not always, but it'll be very interesting for me to watch some of these correlations, as opposed to, I wish I had a crystal ball and could tell you where I think that some of these assets are going to trade the next few months, but it'll be interesting to see how they trade in relation to one another.
Yeah, that's interesting correlation there. How you found that correlation, that's interesting as well, because that's pretty, I'm not too sure how you were actually looking at BTC versus long Japanese JGBs, right? So, but that's interesting. I think, for my take, at least in terms of the U.S. economy, and let's talk a little bit about the tariffs. The U.S. economy generally is doing well right now. Employment in the U.S. has remained really solid, surprisingly solid. We just had JOLTS numbers come out this week that showed more job openings than expected. We also have non-farm payrolls that's coming out on Friday, so that's going to be closely watched for sure. Consumer confidence actually dipped down earlier in the year, or earlier in the year. We're just talking about a month or 2 months ago, but it's rebounded quite a bit in correlation with, I guess, the administration being less hawkish on tariffs, and inflation in general is under control so far. So I think, assuming we don't see any major escalation in terms of tariffs, I think the street is expecting that you're not going to see anything too material, and basically, we've heard the term taco, right? Trump always chickens out. I think that's what the street is expecting, which is basically he's very loud and very aggressive in rhetoric, but I think at the end of the day, that the street is right now is not expecting any major escalation of tariffs from now, which is basically 10% across the board, plus some sector specific tariffs. For example, the 50% tariffs on steel. What does that mean? I think basically people are expecting the U.S. economy to be just fine. I think a lot of companies, a lot of people have sort of readjusted to the new norm, which is these elevated tariffs. And inflation is probably expected to increase just by 1%. From right now, core inflation is at 2.8. So probably in about a year or so, we'll see somewhere around 3.8 or so. So not horrible. GDP growth, I think, is expected to slow, but not go into the negative this year. So in general, we're not going to see that boom that we keep hearing about from the administration. But I think the economy in the U.S. will be just fine. Now, in terms of tariffs, my take on tariffs is again that it's well, the interesting thing is that there's supposed to be all these negotiations that's supposed to be happening right now, but after I guess a couple of months now, we've only seen one sort of official deal done. That's with the UK, and really that wasn't a very material trade deal. I'm actually surprised we haven't seen something from India and Brazil. I think Brazil just said we're ready to negotiate, which I'm surprised by, because I thought they've been negotiating for many weeks. I think but the two biggest counterparts that I guess on the tariff side that we need to focus on is China and Europe. And I think there's going to be two different stories here. So China is really the big one, right? The U.S. really relies on China. China relies on the U.S. I also understand that from some think tanks that that Trump is really not a China hawk, like some of the people in his administration, specifically Peter Navarro, right? So he's not a China hawk. He desperately wants to get a deal done with China. We don't think, or I don't think that we're going to get anything really horrible in terms of tariffs with China. We'll have to see. But I think that if you could sort of see how the markets react when anything negative is being said about China and tariffs, right? So as soon as the administration says that, even though over the weekend or earlier this week that they were talking about how China is not living up to their short-term agreement, the market sold off, right? So it adds a lot of volatility, but at the same time, you sort of see that the administration is really pushing for a call between Xi Jinping and Trump. And I think the U.S. administration is saying that there is a call on Friday. I'm not too sure whether that's been confirmed by the Chinese yet. But it seems as though China is not in as much of a rush to get a deal done as Trump is, right? So I think that's why you've been seeing quite a bit of background negotiation that's been going on with China. Now, on the EU side, though, I think it's very different because I think that deal is going to take longer and it's going to be a little bit harder because I think Trump doesn't love the EU, unfortunately. So we'll have to see what happens there. But I think at the end of the day, Trump needs to get these deals done very quickly. We're in June. I think really he needs to get these deals done before, like by September, October, because then you're sort of getting into the midterms for next year, which he needs to hold the House and the Senate. So there's some interesting deadlines that he needs to meet, and we'll have to see. But bottom line, I think that the main point I'm trying to make is I think the U.S. economy will be fine. I think the tariffs will be fine. It's going to be a lot of bumps in the road, and we'll have to monitor it very carefully. But that's where we are at, right now. I'm not too sure if you guys want to,
I'm
add a few things. Yeah.
I'm interested in something you said. Do you really believe you can trust the data that comes out of the JOLT reports and all of that, Michigan survey and all of that?
Because I think they're really done by very independent. So in terms of trust, well, I'm going to have to say you have to trust it, because it is the United States, that there are many eyes focusing on these things. And I don't think the administration controls all of it, right? So this isn't like in China, right? So a lot of these, like JOLTS, is not done by the U.S. government. The Michigan surveys, I don't know who puts that out, but I think that it's going to be hard to fudge it. And certainly, if it's a little bit like, if you're going to control the Fed, I think it'll have a very similar impact on the markets if people realize that you can't trust this data. But there's also a lot of alternative data that support the official data coming out of the U.S.
Yeah, my point is, are they telling the whole story? Because I keep hearing the take seems to be generally that the U.S. economy is just fine, and then it's gonna come back up. I think Atlanta GDP now was 4.8%, so it's crazy high. There's this big whipsaw all of a sudden, and it just looks apparently the tariffs were a big non-event. But
the tariffs it hasn't been it isn't necessarily a non-event. So I think it has sort of settled. The economies and market participants have settled for higher tariffs. Also, keep in mind, the retailers, big retailers, front-loaded their orders in anticipation of tariffs. A lot of these companies have also guided down for the year, right? So that's all part of the adjustment. Now, if the administration comes out and says 100% tariffs on everyone across the board, then you're going to have problems, right? But as of right now, 10% tariffs and some sector-specific ones, I think the economy is so big that it could adjust and adapt to it quickly.
Yeah, I mean, it is pretty funny. Every month, it seems like the major sell-side banks are revising whether we're going to be in a recession or everything's going to be just fine. I mean, I know it's their job. You got to evaluate new information as it comes out. I do think outside of the tariff side with the U.S. economy, from a fiscal perspective, I mean, both Republicans and Democrats just showed absolutely no willingness to take on any degree of fiscal austerity in the next spending bill that's coming forward. So, if you
the big beautiful bill,
exactly. So, again, taking the tariffs off the table for a second, we're going to keep spending at the rate the U.S. government has. We've had some questionable. What was it? That 20-year auction that was a little shaky a few weeks ago. If we start to see cracks in things like that with the spending picking up, what does that lead to from a monetary perspective, I think is then the question. So
so my view on that is I think so the big beautiful bill is
it's funny hearing you say that very seriously.
I know trying to keep a straight face. It's very hard to do, but the big beautiful bill is a lot of the economic benefits are actually front loaded. So even though GDP is expected to slow down because of the tariffs and the inflation, I think that we're going to get a little bit of a pickup from the front loading of a lot of this stuff from the big beautiful bill. Now the BBB is not passed yet, and I think there's going to be quite a bit of adjustments to it. I just heard this morning that I think it passed the House or something passed the House, and some Republicans didn't realize what they were voting for some reason, which is shocking. But it just shows you that it's a very complicated bill. There are a lot of tentacles within it, but from what I understand, if it passes, it's going to prop up the U.S. economy a little bit in the first year or two. So it could offset things. Now, going back to what you said in terms of increasing the deficit, yeah, I think that's a longer term thing. It probably won't be an immediate thing. I don't know how it is for the U.S. dollar or the strength of the U.S. dollar, and whether it continues to be a reserve currency, but yeah, in the near term, economically, it's okay. As whether it's helping in the long term, we'll have to see.
But I think it's very interesting what you said, John. That it's completely agnostic to where you stand, whether you're Dem or like a Republican. Like, I just feel like the U.S. government and all of the Western government, for that matter, they're just hooked on easy money, and I think that's not going anywhere. And that's funny because you were mentioning about Bitcoin correlation to Nasdaq, and my view is that on this particular topic, but I guess it's more philosophical rather than macroeconomy, strictly speaking. But Bitcoin, whether we go up or down, economically speaking, it's just good for Bitcoin anyway. So that's why right now you see that a crossroad where you're like, you want to be risk on for Bitcoin, maybe not for altcoins because some of them are not going to go back up. But for Bitcoin, I mean, I don't see a world where it goes back down ever, because like if the economy comes back and then it's all good in the end, you get equities roaring and then everything's just fine, then it's a risk asset, so it's game on. But if the economy collapses and then we end up in a debt problem or like kind of like a debt crisis, then it's good for Bitcoin either way. So my view is that it's just everything is just good for Bitcoin anyway. You should just buy as much as you can, honestly.
I love that take of I'm bringing go. I like to see the correlation breaking down, and Nico just like, no, everything's good. I agree, man. It's been pretty crazy to see. I don't know, when I first got interested in Bitcoin, this was the exact scenario people were talking about. And yeah, I believed that, but I really in my heart of hearts believe that was going to come less than 10 years later? Probably not. Like, it's really been amazing the pace at which this has all played out.
And I saw this Fred chart recently on the Fed website. It's Fred, data website for the Fed. Yeah, it was like the interest charge on GDP for the US is just, the chart is just, it looks like Bitcoin. It genuinely looks like it's a meme. It's been like, it was kind of like flat.
Wait, I'm sorry. It's the percentage of interest on GDP.
Yeah, I need
to. Is that what you said?
I'm probably like talking.
I think it's like 3.5 to 4.5%. That's what
I'll find it and share it with you. But like,
okay.
There's this chart on the Fred website, which is like insane, and you realize that there's a problem. I think there's a problem. And to be honest, it's the same in Europe now. It's just that the scale of the economies we have here, like, it's not the same. So I guess it's kind of like what happened in the US is just bound to contaminate whatever happens elsewhere. But it's like, total public spending, public spending on interest payment or something like that. I'll find it back, and when you see the chart, you're like, okay, this is legit a meme coin. Like, this has gone up so much so fast that it's kind of weird, and it's a bit worrying if you ask me. Honestly, I just find it a bit worrying, especially since governments around the world, they show no signs of restraint. Like, even in Europe, like, austerity doesn't exist. It's not possible.
Like, it's like a drug. It's actually
right. And it's I mean, it's kind of a fundamental potential flaw of representative democracy. Are politicians ever going to effectively vote themselves out of office by doing the right thing, which is not spending infinite amounts of money? It's partly the beauty of Bitcoin being apolitical. And I think that's, at least for myself, and I'm assuming for others here, part of the amazing aspect of crypto is that it is independent of regions or political regimes.
Yeah.
So very good insights. So I wonder how you guys are positioning in these markets as an institution.
Should we let the trader kick off?
Yeah. So you're saying positioning as in like for institutions, for retail, for
retail. Yeah. I mean, for those that's listening in, what do you recommend in terms of positioning?
Yeah, I mean, first of all, I don't recommend anything. Whoever does.
Sorry.
What I would say is, I mean, that was a bit of the talk we just had. It's always time for Bitcoin accumulation, which seems to be like the not the safest play, but like the kind of it actually. And then there is another question like raising is people are wondering, will alt season ever come back again or no, because they were previous ones, and short answer is probably not, or not as before, for different reasons. First is we have way more tokens, different tokens than we used to have, so liquidity is just like split across everything, so it's pretty hard like to just go and find the next gem, even though there will be some that will perform for sure, but they won't be like a altcoin season like we used to have. But there are some which you could is the project that actually generates revenue should be the one you focused on.
Revenue. Wow. What is that?
Novel concept in crypto.
Yes,
exactly. No, but they are like platform exchanges. They obviously they charge fee for trading, and then they generate like lots of revenue for that. And some of them have like a buyback mechanism for the token, and this incentivize like people like they liked it. So I would go for that as well.
Yeah, I think to emphasize a lot of things Sacha's just mentioned, the way I kind of view the world, and the hashtag, none of this is financial advice, just my own kind of mental model. It's kind of Bitcoin and everything else. And not that that's a good and a bad, it's just you kind of need to look at it in both perspectives. So yeah, I'm the same way. I'm kind of passively always accumulating Bitcoin. That's just what I do. I'm not necessarily saying do that, but so there's the Bitcoin world. On the everything else side of things, totally agree with the fee generating protocol side of things. We've seen some of the blue chip DeFi names benefit from that. I think there's a lot of interesting proposals out there around fee switches, and fee switches, for those not familiar, is just having fees accumulate to token holders in one way or another. I think that's a really interesting trend that everyone in the space should be on top of. I think the other one that I've been spending a lot of time thinking about, I mean, everyone says the word RWA. RWA means so many different things. At the simplest level, a stablecoin is an RWA. It's a representation of a digital dollar. But I think there's going to be some really interesting fee-generating protocols out there in the RWA world. On-chain equities, I think, is something super interesting. We see how well Robinhood has done over the past 5+ years. I don't see a reason why there shouldn't be a 24/7 digital version of that at some point in the near future, regulation pending. But yeah, for me, those three things: Bitcoin, blue chip fee generating DeFi, and then some of these new emergences in the RWA side.
Yeah, I actually regarding RWA and specifically tokenized equities, even at Dexalot, we're thinking about that as part of our roadmap. So it's early days, and I think it's early days in terms of that, in terms of crypto tokenized stocks on crypto. But I think it'll be a great thing, not just for regular crypto people, but I think it'll be just this is why we're here in terms of blockchain technology and having it be decentralized and accessible around the world. And I think it's a good thing to do, right? So speaking about some of the sectors you guys mentioned, over the next I guess remainder of the year, what are you guys most excited about? Which sectors?
Nico, do you want to
in
go?
the near term?
I think gaming will make a comeback.
Gaming, okay.
It's a bit underloved right now. We haven't seen a huge success in gaming since Axie Infinity, I think, in crypto. Like Godzilla, what's the name of that game again? Off the Grid, I think.
Off the Grid,
Off the Grid.
Yeah, it's like it was so hyped, and then it's a bit like nothing happened really.
Not yet.
The game's good. The game's good.
Close friends with the Godzilla team, so.
Yeah, no, I mean the game's very good. It's just that as a token itself, and in this industry, you have to think about it like the tokens are often not equivalent to the project that they represent. They live their own life sometimes, more often than not. And I think the token itself hasn't been really, it's kind of been like a bit disappointing. But I think we are bound to see one huge gaming success, maybe this year, early next year, because it just makes so much sense. It's just like I don't think the recipe's been cooked fully yet. There's gonna be one big success, I think, that's gonna emulate a bit like the Sky Mavis Axie of the world, because it's just such it's a on crack combination. Like you put crypto and kind of like gaming, gambling in general, and like mobile gaming or whatever. It's just it's been a bit awkward, but I think I'm looking for good names in this space. It's just my personal take.
Got it. Well, actually, I'll turn over to Sacha, but I'll just because we don't have that many minutes left, I'll adjust my question to if you were to put your money besides Bitcoin, what sector and or project would you put the money in?
Yeah, again, I mean, I don't incentivize anyone to do anything, but I think it's what I've said before, like protocols that generate revenue, like platforms, like obviously Hyperliquid is doing well. So this kind of play, I'd say, in besides Bitcoin.
Got it. Okay, John.
Well, I thought you were going to tell us we had to say Dexalot, but in addition to Dexalot and not Bitcoin, I'm going to double down on my comment around RWAs. I think that RWAs it's been a slow and steady process. On-chain money market funds aren't the sexiest thing ever, but it's showing real adoption. As a trading firm, it's pretty cool that we can hold an on-chain asset, use that as trading collateral, and still earn interest. I think there's going to be extensions of that collateral efficiency that extends to other parts of RWAs. Again, I mentioned one earlier. I'm very excited about tokenized equity assets because, Tim, to your point, that's our reason of existence as a crypto industry is add transparency, add fast finality, add 24/7 markets to legacy financial assets. So aside from Dexalot and Bitcoin, I'm going to go with broadly things in the RWA category.
Okay, great. For me, I'm agnostic because I'm a DEX, so I want to list as many tokens as possible. I do hope gaming comes back because we did list the gun token. We have the Pulsar token. And I do think that gaming, unfortunately, is not like a traditional crypto project. A lot of these games and a lot of these gaming related projects like Scale and Immutable it takes time. It takes a lot of time to build these things, and I think So you have a bit of a mismatch between crypto speed and gaming speed, right? So, but yeah, at the end of the day, we're sector agnostic. We are crypto project agnostic. So we just want to list as many good projects as possible on as many chains as possible. So with that said, I think we're sort of out of time. Gökçe, you want to close this off?
Yeah, it was a very insightful video. Thank you guys for joining. Really enjoyed it. So yeah, we can close off. Thank you for the watchers as well.
Having us.
Thank you,
everyone.
Thanks, guys.
Good chatting all.
Appreciate it. See you next time. All right, bye-bye.
Bye.
Bye-bye.